Welcome to our deep dive today. We're going to be looking at Indo Farm Equipment Limited,
Okay.
and this is an Indian manufacturer of tractors and cranes,
Right.
and we're looking at them
Mm.
through their draft and final red herring prospectus
Yeah.
that they filed for an initial public offering.
Yeah.
And, these documents are kind of like a company's resume for potential investors.
That's a good way to put it. Yeah.
So we're trying to figure out if this is a
Yeah.
company worth investing in.
Exactly.
Yeah.
So
They're packed with information in these prospectuses.
yeah.
Everything from
Mm-hmm.
the dry financials
Yeah.
to like their growth strategy and the risks they face.
Right.
It's fascinating.
Okay. So first things first.
Yeah.
What is a red herring prospectus?
So basically it's a preliminary prospectus
Right.
that's filed with the regulatory authorities
Mm-hmm.
before a company goes public.
Okay.
And it includes most of the information that you'd find in the final prospectus. Right.
But it might be missing some key details.
Okay.
Like the final offer price.
Got it.
So think of it as a sneak peek for potential investors.
Right.
It gives them a chance to kind of get a feel for the company
Mm-hmm.
before they make any decisions.
So like a test run
Exactly.
before the main event.
Mm-hmm.
Okay, so let's talk about Indo Farm itself.
Sure.
They make tractors and cranes.
Yes.
They mainly operate in North India,
Mm-hmm.
but they have ambitions to expand across the country.
Yeah. Across India.
What else should we know about this company?
Well, one thing that really stands out to me
Yeah.
is this unique setup they have with a subsidiary
Okay.
called Baroda Finance Limited.
Okay.
And this subsidiary provides
Mm.
in-house financing options for their customers.
Okay.
It's a strategy known as backward integration.
So instead of relying on like external banks or lenders,
Yeah,
they're keeping everything
under one roof.
under one roof.
Yeah.
But how does that benefit Indo Farm?
And their customers.
For customers, it really simplifies the purchasing process.
Okay.
Imagine you're a farmer and you want to buy a new tractor.
Right.
Instead of having to deal with
Mhm.
multiple financial institutions,
Right.
you can just get everything sorted directly through Indo Farm.
Mhm.
And for Indo Farm itself,
Yeah.
it helps create a more loyal customer base,
Makes sense.
gives them greater control over their financing terms,
Mm-hmm.
and could potentially generate additional revenue streams.
Interesting. So it's a win-win.
Yeah.
Definitely for both sides.
Mm-hmm.
Okay, let's get into the all-important financials.
Yes,
You mentioned earlier that Indofarm's revenue has been growing
it has.
over the past few years.
Yeah,
Can you give us some more specifics?
certainly.
Yeah.
So their revenue has increased from about
Okay.
3,308.67 million rupees in fiscal year 2022
Okay.
to 3,524.61 million in fiscal year 2024.
Go ahead.
And what's noteworthy is that
Yeah.
this growth wasn't just driven by price increases, right?
It seems that they're actually gaining market share,
Okay,
especially in their core North Indian market.
that's a good sign.
It is.
But revenue is only part of the story.
Right.
What about their profitability?
Well,
Are they actually making money?
yes, Indofarm is a profitable company,
Okay, that's good.
which is always a plus for potential investors.
Right.
They've shown consistent profit growth
Mm-hmm.
over the past few years,
Okay,
which indicates a healthy business model.
good.
Now, their debt-to-equity ratio
Oh,
is a bit higher compared to some industry peers,
okay.
but it's important to understand what that means.
Yeah.
It's basically a measure of how much debt a company is using
Okay.
to finance its assets
Mm-hmm.
relative to the amount of equity
Right.
invested by its owners.
So a higher debt-to-equity ratio could indicate a higher financial risk.
Yes, but it's not necessarily a red flag.
Okay.
In Indofarm's case, their slightly higher ratio
Uh.
is partly attributed to their backward integration strategy,
All right.
specifically their ownership of Baroda Finance,
Yeah.
which requires
Mhm.
significant capital
And
investment.
we've seen how that strategy can actually be a strength for them in the
Mhm.
long run.
Exactly.
Now, flipping through their prospectus,
Yeah,
there's a lot of talk about expansion plans.
a lot of ambition there.
It seems Indofarm isn't content with just being a regional player.
They want to go national.
Yeah.
Yeah.
They have ambitious plans to expand their dealer network
They do.
from 160 to over 500 in the next 3 years.
That's a big jump.
That's a massive undertaking.
Mm-hmm.
What makes them think they can pull this off?
Well, they're not just expanding for the sake of it.
Okay.
They're developing
Yeah.
new tractor models
Mm-hmm.
with innovative features
Mm.
like temperature-controlled cabins,
Right.
which would be a huge draw
Yeah.
in India's diverse climate.
Makes sense.
And they're even venturing into electric tractors. Tapping into that growing demand
Yeah.
for sustainable agriculture solutions.
So they're pairing their expansion with innovation.
Exactly.
They're going to stay ahead of the curve.
Mm-hmm.
Now, while this expansion strategy sounds exciting,
Sure.
it's also important to consider the risks, right?
Absolutely. Every investment comes with risks.
Right.
And the prospectus outlines
Yeah.
several key factors that could impact
Yeah.
Indofarm's future success.
Let's start with something that immediately caught my attention.
Okay.
Indofarm seems quite dependent on the monsoon season.
The monsoon is very important in India.
How could that impact their business?
Well, this is a crucial point,
Yeah.
especially when you consider that their focus is on agricultural equipment.
Right.
India's agriculture sector is heavily reliant on the monsoon rains. And any deviations from normal rainfall patterns can have like a ripple effect on the whole industry.
So a delayed monsoon or a drought could potentially lead to lower crop yields, which could then affect farmers' purchasing power and ultimately hurt Indofarm's tractor sales.
Absolutely. That's the concern.
Yeah.
The prospectus even cites specific examples from past years where drought conditions or excessive rainfall led to disruptions in the agricultural supply chain.
Makes sense.
And that impacted Indofarm's operations.
That brings up another potential risk highlighted in the prospectus, their dependence on a few key dealers.
Right.
If I recall correctly, the top 10 dealers contributed to almost 20%
A lot,
of their total revenue in fiscal year 2023.
Yeah, that's right.
So while having strong relationships with key dealers can be beneficial, such a concentration also poses a risk.
It does.
If those relationships were to deteriorate,
Yep.
or if any of those key dealers were to face financial difficulties, it could significantly impact Indofarm's sales and overall performance.
Big impact, potentially.
So having all your eggs in one basket.
Yeah.
Or in this case, a few baskets
Oh, yeah.
could backfire.
It could.
Now, we can't talk about risks without mentioning competition.
Of course not.
Indofarm operates in a crowded market
Very competitive.
with both domestic and international players vying for a slice of the pie.
Absolutely. It's a big market, but it's crowded.
So the global tractor market is fiercely competitive.
It is.
And Indofarm is up against some heavyweights.
Some big names.
The prospectus acknowledges the presence of established brands like Mahindra and Mahindra and Escort's Kubota, which have a long history and a strong foothold
Yeah, you're well
in
established.
the Indian market.
For sure.
So how does a company like Indofarm, with its regional focus and relatively smaller size, compete with these giants?
Well, their prospectus outlines a multi-pronged strategy. They plan to leverage their strong brand recognition in North India as a springboard for nationwide expansion.
Got it.
So they're well known in the North,
Right.
and they're hoping to use that to their advantage
Okay.
as they expand across India.
So it's almost like a local favorite trying to break into
Yeah,
the big leagues.
I like that analogy.
Yeah.
And they're not just relying on name recognition.
Okay.
They're also pushing their backward integration strategy,
Right.
owning the manufacturing and financing processes as a key differentiator.
We've talked about
Yeah,
the pros and cons of that.
right.
It can give them more control, but also comes with its own set of risks
Of course.
if they don't manage it well.
You have to be careful.
Right.
But in a market where reliability and quick turnaround times are crucial, that in-house capability could be a real advantage.
Makes sense.
They're also banking on their in-house financing arm,
Right.
Broda Finance, to make their products more accessible to a wider range of customers.
It's a smart move,
Yeah.
especially considering that many farmers and
Right.
smaller construction businesses might face difficulties
Yeah, it can be tough.
securing financing through
That's it.
traditional channels. So they've got a decent strategy, but how do their financials
Okay.
actually compare to these big players?
Well, we have to be realistic here.
Welcome back to our deep dive into Indofarm Equipment Limited. Last time we covered their background financials and some of the risks they face.
We did.
Now let's dig a little deeper
Okay.
into their financials.
Bye.
One of the first things that jumps out from the prospectus is their capital expenditure plan.
Yeah, big plans.
They're allocating a significant amount of money
They are.
towards expanding their pick and carry crane manufacturing capacity. If I remember correctly, they're building a whole new dedicated unit.
For this.
That's right.
Yes, a whole new unit.
Wow, and the prospectus actually breaks down
It does.
the projected costs, which are estimated to be around 706.15 million rupees.
Yeah, that's a lot of money.
Wow, that's a serious investment.
It is.
What makes them so confident in the pick-and-carry crane segment?
The construction and infrastructure industries in India are booming.
Okay.
And pick-and-carry cranes are in high demand because they're so versatile and mobile.
Right.
So Indo Farm is clearly betting on this trend to continue.
Yeah.
And they want to capitalize on this growth opportunity.
But as with any large-scale project,
of course,
there are always risks involved, right?
Oh, absolutely.
The prospectus acknowledges potential challenges, like cost overruns, construction delays, and even regulatory hurdles.
Yeah, those are always a
It
possibility.
could impact the project's timeline and profitability.
For sure.
So while it's a promising opportunity, it's not without its potential pitfalls.
You'll be careful.
Now, how are they planning to finance this ambitious expansion?
Well, a significant portion of the funds raised from their IPO will be allocated towards this expansion project.
Makes sense.
It's pretty common, actually, for companies going public to use IPO proceeds for strategic investments like this.
So they're essentially tapping into the public market to fuel their growth ambitions. But let's not forget about their existing business.
Right.
How is Indo Farm performing in their core tractor and crane segments?
In fiscal year 2024,
Okay.
their revenue was split almost evenly between tractors and cranes.
Okay.
With tractors contributing around 52% and cranes making up roughly 48%.
So a well-balanced portfolio?
Yeah, pretty balanced.
What are some of the key factors driving their sales in these segments?
Well, their expansion strategy is definitely a key driver. As they expand their dealer network across India, they're reaching a wider customer base.
Okay.
But it's not just about quantity. They're also focused on quality and innovation.
We talked earlier about their new tractor models.
Yes.
With temperature-controlled cabins.
Those are popular.
And their foray into electric tractors.
Right. Keeping up with the times.
It seems like they're really trying to stand out.
They are.
In a competitive market.
Absolutely.
They're also leveraging Baroda Finance, their in-house financing arm, to make their products more accessible to customers.
Especially in a market where access to credit can be a challenge for many.
It seems like a smart strategic move.
Smart move.
It not only helps them sell more tractors and cranes, but also strengthens their customer relationships.
Yeah, that's key.
But let's get down to the bottom line.
Okay.
Are they translating these sales into profits?
Yes, they are. Indo Farm has demonstrated consistent profitability over the past few years, which is a good indicator of a healthy and sustainable business model.
That's certainly good news.
It is.
For potential investors. But what about their debt levels? We discussed earlier that their debt-to-equity ratio is slightly higher than some of their peers.
A little bit higher.
That's right. Their debt-to-equity ratio stands at 0.72 as of June 30, 2024.
As of June 30th.
However, the prospectus provides detailed information about their debt servicing capabilities, assuring investors of their ability to manage their debt responsibly.
And handle it.
So while their debt levels are something to be mindful of, it doesn't appear to be a major cause for concern.
It doesn't seem to be a huge problem.
Now let's shift our focus back
to
those risk factors outlined in the prospectus. We already touched upon their dependence on the monsoon season and their reliance on a few key dealers.
Yeah, those are big ones.
What other potential risks should investors be aware of?
One area that often gets overlooked is inventory management.
Okay.
Indo Farm, being a backward integrated company, maintains a large inventory of spare parts and components.
Right, because they manufacture a lot of their parts in-house.
Exactly.
But how could this be considered a risk?
Well, imagine a scenario where they overestimate demand for certain parts, or if those parts become obsolete due to technological advancements.
Yeah, that makes sense.
They could end up with a lot of dead stock, tying up capital, and ultimately hurting their profitability.
I see.
It happens.
Having a lot of inventory sitting around isn't always a good thing.
Not always.
It's like having a closet full of clothes you never wear.
That's a good analogy.
It takes up space and might even lose its value over time.
Exactly. It's the same idea.
And the prospectus does highlight the importance of efficient inventory management systems and security measures to mitigate the risks associated with potential obsolescence and theft.
Those are important factors.
So inventory management is something investors should keep in mind.
Definitely.
What other red flags should we be on the lookout for?
Well, we can't ignore the ever-present threat of competition.
Right.
Indofarm operates in a highly competitive market, facing off against established domestic players and even international giants.
We talked earlier about Mahindra and Escorts Kubota.
We did.
But are there any other significant competitors?
There are.
We should be aware of.
The prospectus mentions Action Construction Equipment as a key competitor in the crane segment. And there are numerous other regional and global players vying for market share.
So it's a crowded playing field.
It is very crowded.
How does Indofarm plan to navigate this intense competition and emerge as a winner?
They're focusing on building a strong brand. Differentiating their products through innovation and leveraging their in-house financing arm to attract customers.
So it's a mix of traditional strategies like brand building and more unique approaches, like their focus on in-house financing.
It's a good mix.
Now, competition isn't the only external factor that could impact their business.
No.
What about the regulatory environment in India?
That's another crucial aspect to consider. India's regulatory landscape can be complex and subject to change. And any new regulations related to emissions, safety standards, or even taxation could directly impact Indofarm's operations and profitability.
It's like trying to hit a moving target.
It is a moving target.
Regulations are constantly evolving, and businesses need to be agile and adaptable to stay ahead of the curve.
Absolutely.
And the prospectus does acknowledge the potential impact of regulatory changes, emphasizing the need for continuous monitoring and compliance.
They have to stay on top of it.
So we've got inventory management, competition, and regulatory changes, all potential challenges for Indofarm.
A lot of challenges.
Is there anything else we should add to our risk assessment checklist?
There's one more significant risk. And it's a global one.
What's that?
Economic conditions.
Oh, right.
Indofarm's business, like any other, is influenced by global trends.
Makes sense.
Particularly fluctuations in commodity prices and demand from international markets.
Right, because they do export some of their products, right?
They do.
And any economic slowdown in key export markets could potentially impact their sales and profitability.
Definitely a risk.
It's a reminder that we live in an interconnected world.
We do.
And what happens in one corner of the globe can have ripple effects across borders.
Absolutely.
And the prospectus acknowledges these global risks, highlighting the importance of diversification and adaptability in navigating a volatile global landscape.
Definitely volatile these days.
So we've covered a lot of ground.
We have.
From their financial performance to your growth strategy and the various risks they face.
A lot of information.
What's the overall verdict so far?
Wow.
Is Indofarm Equipment Limited a company worth investing in?
There's no simple answer.
It
all boils down to your individual investment goals and risk tolerance.
So no crystal ball predictions today?
I'm afraid not.
Okay.
But what we can offer is a framework for making an informed decision.
All right.
So Indofarm has a lot going for it. Yeah. They operate in a growing market. They've got a strategic vision.
Right.
And they're demonstrating a commitment to innovation.
And they seem to be keenly aware of the challenges they face.
They do.
Which is always a good sign.
Yeah, it shows they're thinking ahead.
Exactly.
But potential investors need to carefully weigh those challenges against the opportunities and decide for themselves if Indofarm aligns with their overall investment strategy.
So we've provided the information and insights, and now it's up to each individual to do their own research.
Absolutely.
Dig deeper into those prospectuses and ultimately make their own call.
It's their money.
Sounds like we've got more digging to do.
We do.
Let's take a break here.
Okay.
And resume our deep dive in part 3.
Sounds good.
Where we'll attempt to answer that all-important question.
The big question.
Is Indofarm Equipment Limited an investment worth considering?
Welcome back to the Deep Dive. We've spent the last 2 parts getting to know Indo Farm Equipment Limited.
Yeah, we've learned a lot.
And now it's time to kind of synthesize what we've learned.
Right, bring it all together.
We've seen their financials, their plans, and the challenges they face. But how do they really stack up against their competition?
Well, that's the key question, isn't it?
Yeah.
For any potential investor.
Right.
We need to understand where Indo Farm sits in the market. We've touched on some of their competitors already.
Right.
But the prospectus specifically names a few heavy hitters.
Okay.
Mahindra, Escorts, Kubota,
Yeah.
and Action Construction Equipment.
Right.
These are established players, some with a global presence.
So how can Indo Farm, with their regional focus, compete with giants like these?
It's a valid concern. Yeah. Their strategy seems to be multifaceted. Okay. They're leveraging their strong brand recognition in North India.
Okay.
They've built a solid reputation there.
Right. And now they're aiming to translate that success to a national stage.
It's almost like a local favorite trying to break into the big leagues.
That's a good way to put it.
Right.
And they're not just relying on name recognition.
Yeah, okay.
They're also pushing their backward integration strategy.
Right.
Owning the manufacturing and financing processes as a key differentiator.
We've talked about the pros and cons of that.
Right.
It can give them more control, but also comes with its own set of risks.
Of course.
If they don't manage it well.
It's a balancing act.
Right.
But in a market where reliability and quick turnaround times are crucial, that in-house capability could be a real advantage.
Okay.
They're also banking on their in-house financing arm, Baroda Finance, to make their products more accessible to a wider range of customers.
The smart move.
It is.
Especially considering that many farmers and smaller construction businesses might face difficulties.
Yeah. Access to credit can be tough.
Securing financing through traditional channels.
Definitely a challenge for some.
So they've got a decent strategy.
They do.
But how do their financials actually compare to these big players?
Well, we have to be realistic here.
Yeah.
Indo Farm is still relatively small compared to some of these giants.
Right.
Their revenue is growing.
Yeah.
But it's still a fraction of what a company like Mahindra generates.
So there's a lot of ground to cover.
There is.
If they want to reach the top.
A lot of catching up to do.
Right.
But on the flip side, that means there's also a lot of room for growth.
Okay.
Their focus on expanding their dealer network and entering new markets could lead to substantial revenue increases in the coming years.
So it's a potential growth story?
It is.
But with some catching up to do.
For sure.
What about their profitability? Are they generating healthy margins?
Their gross margins are solid.
Okay.
And they've consistently turned a profit. However, their net profit margins are a bit lower than some of the industry leaders.
That might raise some eyebrows.
It might.
Among investors who are looking for strong bottom line performance.
They want to see that profit.
Right.
It's definitely something to consider. But we also have to factor in their stage of development.
Right.
They're investing heavily in expansion.
Yeah.
And those costs can impact short-term profitability.
It's that classic trade-off.
It is.
You often have to spend money to make money.
Exactly.
Investors need to decide if they're comfortable with that.
Right, it's a gamble.
And if they believe in Indo Farm's long-term vision.
Long-term vision is key.
Now, we've already spent quite a bit of time discussing the various risks outlined in the prospectus.
Yep, all those risk factors.
Do any of those stand out as
particularly concerning?
They all deserve attention.
Yeah.
But their dependence on the monsoon season is particularly noteworthy. Any disruptions to the monsoon cycle can directly impact agricultural output, which could then trickle down and affect tractor sales.
It's a stark reminder that some things are simply beyond a company's control. Mother Nature has her own plans.
Right.
And it highlights the importance of diversification, both in terms of product offerings and geographical reach.
So let's bring this all together.
Okay.
We've explored their financials, analyzed their growth strategy, and dissected the risks they face.
We've covered it all.
What's the final verdict?
The big question.
Is Indo Farm Equipment Limited a company worth investing in?
Well, there's no easy answer.
Okay.
It all boils down to your individual investment goals and risk tolerance.
So no crystal ball predictions today.
Afraid not. No crystal ball.
Okay.
But what we can offer is a framework for making an informed decision.
Okay.
So Indofarm has a lot going for it.
Right.
They operate in a growing market. They've got a strategic vision.
Yeah.
And they're demonstrating a commitment to innovation. And they seem to be aware of the challenges they face.
They do.
Which is a good sign.
Right.
It shows they're being realistic.
Exactly.
But potential investors need to carefully weigh those challenges against the opportunities and decide for themselves if Indofarm aligns with their overall investment strategy.
So we've provided the information and insights.
We have.
And now it's up to each individual to do their own research.
Absolutely.
Dig deeper into those prospectuses and ultimately make their own call.
It's their money, after all.
We hope this deep dive into Indofarm Equipment Limited has been helpful.
I hope so, too.
As always, we encourage you to continue exploring, asking questions, and seeking out diverse perspectives.
Always good to get different viewpoints.
And until next time, happy investing.
Happy investing, everyone.